Hey guys, what's going on? Welcome to your weekly stock market recap. I'm Robert Montez with Link Financial Advisory. Today we're going to be covering what happened the week of April 18th, 25th, 2025, and we are going to be focusing on what helped the market, what hurt the market, and your key takeaways as an investor. Let's hop right into what helped the market. So what helped the market last week here in the United States were primarily two industries, which are going to be technology and then energy. With technology, we saw companies such as Tesla, Nvidia, we saw Alphabet, we saw Meta all have really strong reports and their stock prices finish up. Tesla finished up about 10%. Nvidia was up about, I think it was 8%. So a really solid week last week for those companies. And obviously being as big of a part of the index they are in the S&P 500, that helped returns look pretty good. As far as energy, we saw some of the restrictions from the trade tensions that are going on between China and the United States with oil being imported affect the price of oil per barrel. I think we finished up around like $62, $63 last week per barrel. So that did drive up prices there, which helped energy based stocks. And then we saw gold hit a record high. Gosh, I'm going to draw a blank, but I think it finished up around like 34.20, 34.30, somewhere in there per ounce, which was a record high. As far as what hurt the market, it's the same thing we've been talking about, primarily the trade tensions between the United States and China. As a refresher, the United States has a 145% tariff on Chinese imported goods, which is about $300 billion worth of goods. China reciprocated with a 125% tariff on about $80 billion of our goods going there. So that has still created some uncertainty in the market as a whole. Internationally, we saw Europe's markets finish at about a little modest gains, nothing crazy. Japan was up about 2%. China was at a break even, so nothing too crazy to report there. Kind of par for the course. As far as key takeaways, the main takeaway I'd like to say is, hey, stay diversified and keep thinking long term. If you look at returns long term versus short term, yes, there's been some volatility here short term. But if you look over the past year, the S&P 500 is up over 11%. If you look over the past 5 years, the S&P 500 is up over 9.4%. If you look at the last 10 years, S&P 500 is up over 13%, and over the last 20 years, the S&P 500 is up right at 9.3%. What does this mean? For a long-term investor, if you invested $10,000 back in 2005 and you just let it ride and track the S&P 500, that $10,000 would have grown to just under $16,000. So keep a long-term perspective. As always, if you have questions, reach out. We're here to help. Love to give people a second set of eyes on what they're doing with their portfolios. Hope to hear from you guys soon, and thank you for watching. Take care.